Hey everyone, and welcome to today's episode of 1% BTC, where David and I take you on your journey to get to your first percentage invested into Bitcoin, and more importantly, your first percent invested. So, what have we got on the agenda today? Well, we've got some technicals, Bitcoin's IPO moment, as they're calling it, some news and nation state adoption, treasury rumors, real estate, tariffs, gold, price projections. We've pretty much got everything. And the reason for that is David and I are committed to giving you the highest ROA, return on your attention, through pure IV, information velocity. We are going to try and deliver you as much information as we can, jam-packed into these videos. Quick disclaimer, neither David or myself are financial advisors. We instruct you to go speak to a fiduciary before making any financial decisions. Hashtag do your own research. So thought it was fitting to start off with a principle from Ray Dalio. So for those of you that don't know, Ray Dalio is the billionaire founder of Bridgewater Associates. That is the world's largest hedge fund. And he is known for pioneering what's known as risk parity. So adjusting your investments based on the sizes in your portfolio based on the amount of risk they carry. Now, I love Dalio's quote from his book Principles: be radically open-minded and radically transparent. Basically, by this, what he means is to actively invite opposing views and treat disagreement as a path to the truth. Set your ego aside, question your assumptions, and stay willing to change your mind. And also view your mistakes and criticism as essential tools for growth and improvement. And I think, David, you'd agree with me that that pretty much aligns with what we're trying to do here at 1% BTC.
Exactly. I really like that you pulled out this quote, because Ray Dalio, I've been following Ray Dalio for years, but he's been very traditional in his kind of investment approach. And he's very famous for Bridgewater Associates for having the all-weather portfolio, really for the general investor. And it was only recently, I would say in the past year, 2 years, that he started awakening to Bitcoin and the opportunities that Bitcoin had to offer. And to have one of the most successful investors in history back and support Bitcoin is a big hat in the ring, you know, for this movement.
Well, and it's not just a minor, you actually read my mind, because it's not just a minor step that old Ray is taking in. He's actually said, he's recommended that in order to protect yourself against the debasement trade, he's recommending that you could have up to 15% in either gold or Bitcoin and or both. So total allocation 15% in gold, Bitcoin, or both of them. So
that's an interesting shift where it's gold and Bitcoin. It's not one or the other, and it's not, you know, like, have you noticed that shift where before, I'd say a year ago, it was, you know, the gold bugs were fighting against the Bitcoiners and vice versa, right? Now they've kind of joined forces.
They have. Well, they're sort of two guys trying to, I like to think of it in this way. The Titanic is sinking. You both jump into a lifeboat. One's made out of wood, the other one's made out, the other one's an inflatable. And you're both trying to survive the ship sinking. Now you've got different boats, you're trying to go in it a different way. It just depends on what your viewpoint is. I actually like the thinking that gold is for pessimism. So gold is if you think the world is going to completely end, so the internet's going to go out, there's going to be no electricity, you're going to go back to a complete barter system. And Bitcoin's for optimism. Bitcoin is the idea that technology is only going to increase, get faster, more exponential, and therefore in that world where you're going to need to transmit information at the speed of light, etc., Bitcoin is the currency of AI. It's the currency of the future.
I love that. I love that distinction and the analogy with the life raft or the lifeboats when the Titanic is sinking, because yeah, it makes a lot of sense that you want to save yourselves, right? But for the reason I think you and I both share this you know, support of Bitcoin is it is the future. It's not, we're not doomsday sayers. We're not, you know, hiring a bunker in the middle of nowhere and just getting canned food and just, you know, hunkering down for Armageddon.
We believe in a brighter future, and the future that Bitcoin can bring.
So it's hope. on the one hand, yeah, and then pessimism on the other. Yeah.
That's completely right. Love that. Yeah. Hope v pessimism. Bitcoin v gold. Love it. So look, guys, David and I are just two blokes on the internet. Although we believe in our message and we're going to try, and we always try and be as honest as possible, bear in mind that we can be wrong, and nowhere is this more obvious than in what you're seeing with where people are sourcing information from. So I thought that this was very interesting. What it shows is over the past year, the drop in traffic to legacy financial media websites. So what I found most interesting, and I highlighted that at the bottom, Forbes down 52%.
Wow.
And that is because Leaked Media Matters war map, so this on the right is called a war map, shows that the establishment is losing control of the information ecosystem. So way to think of it, between 1950s and about 2010, media power was centralized, that they had control over TV, print, radio, and they could use that to sort of weaponize their legitimacy. Then the internet came along. Platforms like YouTube, Spotify, Substack, X started to shatter that monopoly and gave creators like David, you and I, the ability to reach people, and more importantly, well, not more importantly, but also have the ability to monetize that and make a living off that. Now, that meant that alternative media, which here you can see what many in modern day media would call alternative media, like Joe Rogan, Russell Brand, far exceeds those in blue that tend to align with the mainstream media narratives. So legacy media now has prestige without influence, is the way I like to look at it. And the reason that David and I are telling you this is because something that we keep saying to ourselves is that the information is at your fingertips. The reason we're doing this is to try and help you realize that just because you don't have a big team or an official sounding name like Forbes or the Financial Times doesn't mean you aren't capable of interpreting information in very much the same way and finding the most pertinent information that can help you make the best financial decisions.
Yeah.
And I'm going to give you a perfect example of this, David. You'll enjoy this. So 2013, Financial Times dismissed Bitcoin at $138, and they called it a bubble that was like the tulip bubble or the dot-com mania. 12 years later, here we are. Even after a bit of a crash, Bitcoin is still around 105K. So the business press misunderstands innovation, in my eyes. And
yes,
even the experts can be wrong. Yeah, so don't trust, verify.
Excellent. Nice, nice.
So let's go on to our Bitcoin news. So first, did say a couple of quick technicals. So we mentioned in the past couple of videos that long-term holders have been selling. Now, there's something different about what we're currently seeing, and I'm going to try and explain it from this chart from the right. So usually these long-term holders, these OG Bitcoin whales, people that have held for over 7 to 10 years, who've got hundreds, if not thousands of Bitcoin, they take profits when the orange line has a dramatic increase. Basically, they sell into the strength. But this time, long-term holder supply is falling while the price is flat. And that is a non-standard pattern. So what does this suggest? It suggests profit taking or rebalancing without a major breakout. We can all see that the price hasn't got up. But the fact that the price is not dropping below 100,000, despite this rampant selling, could mean that there's going to be an accumulation phase. It could mean that the 4-year cycle is over, because I know we keep saying that this time is different. We're starting to see the first few signs that it could be. Now, one of the things that I liked was there's a gentleman called Jordi Visser, who basically over the past week has been doing the rounds because he described this as Bitcoin's IPO moment. So some people look at this and they say, oh my God, these long-term holders that have held Bitcoin for all this time, they're now selling. Well, Jordi says that actually it's kind of like, think of it like Facebook. So when Facebook had its IPO, it had all these initial investors that had held on for a long, long time, a number of years, that basically once they were actually able to sell out into the market, they did. They took, because they'd made exponential profits, they diversified. That didn't mean that Facebook was a bad purchase at that time. Facebook has gone on to far exceed those heights. Now, the reason he compares it to the IPO moment is that because now we've really opened up the avenues for the real big players, the institutions, your BlackRocks, your Fidelities, your JP Morgans, your big banks, your large companies, to actually get into Bitcoin and hold it. The asset is liquid enough. It's got $2 trillion market cap. It's got the it's starting to get different products, mainly offered by the ETFs and strategy, to hit different markets. So think of it like an IPO phase. Bitcoin does not have a sales team. It does not have a marketing team. It does not have a set of initial investors. The initial investors are the people that just bought the coins early enough. So what this seems to look like, to me, I tend to agree with Geordie, is it seems to look like an initial IPO for Bitcoin, entering the institutional world.
You know, I never thought about Bitcoin in terms of an IPO, like as a company kind of debuting on the markets. But that's a great way to look at it. And they've always compared. They've always compared the Bitcoin market cap, and on that list of by market cap, the top 10 companies, and where Bitcoin is buying for. Right, and in comparison also to gold and other asset classes, and it's always such a small percentage, right, of that total market cap and total wealth that's going to be flowing into Bitcoin. But absolutely, as a company, it is still early. It's another reminder that as an IPO, it's still early.
That's it, and it's only when you sort of look at these charts that you actually start to realize. Well, if you go back and you look at Facebook's IPO or Amazon's IPO, you do see a lot of these companies, especially these large tech companies, when they IPO, yes, they might have a dramatic increase, but then there's a pretty long period of sideways action. Yeah, and that is akin to exactly what we're seeing right now.
Yeah.
So just in that space, in case you can't see it. So, quick one, the MVRV score. So this is the market value to realized value. So this basically measures how Bitcoin's market cap, which David has just mentioned, compares to the total cost basis of all coins. Now, I know that sounds complicated, but what you need to know is that a score of 3 or higher means that we're overvalued, and a score of under 2 means that we're undervalued. Now, in the last weekend, the MVRV dropped to 1.8. which tends to signal an accumulation phase. And if you look at these three that I've highlighted here, which is the MVRV in purple, you can see in the white, you can see that it's been directly preceded by a price increase. So let me just show you that again. Look, MVRV bottoms and the far left, and then dramatic price increase in the right. Same thing in the middle. MVRV bottoms, dramatic increase in the white. And on the right-hand side, same thing. So this could mean, if we follow the same tracks, that we are undervalued and that we are going to see a 30 to 50% rebound. One thing that I will point out with this indicator is that without Fed easing or QE, any rebound may stay shallow. Yeah, so this is just an indicator. It's one of many indicators. You shouldn't use it in isolation.
Yeah, good note.
But it's good to keep your bullish hat on.
Nice.
Now this is an interesting one. This was from Coin Bureau. So this talks about the Coinbase premium gap. So obviously we're talking about who's been selling. We're talking about long-term holders who's been selling. Now the Coinbase gap, premium gap, measures the price between Bitcoin on Coinbase, which is the largest US exchange, versus global exchanges. So think about it this way. When it goes negative, so you can see on the far right of the screen, it's negative, it's in the red. So when it's negative, it means US demand is weaker than overseas. So the current gap sits at around $80, confirming this heavy US outflows and waning institutional appetite. So that's obviously not a good thing. And we've seen it. You can look on chain. We've seen around 1 million Bitcoin have been sold by long-term holders since June 2025, and 300,000 since July. So huge outflows. However, although short term, we're likely to see that we could see some further downside. Once the US demand stabilizes, you should start to see medium term accumulation from Asia. So what I would say is, if you were wondering who's selling, looking on chain, looking at the Coinbase premium, it looks like the majority of the selling has come from the US. So just an interesting fact. But I expect that once Asia starts to come online, they're going to start buying those dips. And don't forget, this is all normal. This is just this cycle in this bull market. We've had 7 20+% drops. The drop that we had from 126K down to at this bottom 99 was around 21%. So this is all normal. It's all it's all part of the course. Don't panic.
Right. And it's not even the 32% that we experienced earlier.
If you've been in this for over a year, this should start to feel normal. I mean, it never feels normal. You just learn to deal with the fear better.
Yeah. Excellent.
So touched on ETFs, obviously talking about that fear. Outflows last week were pretty horrendous. We had 2 billion in outflows since October 29th. And that, just put that in perspective, that's the second worst streak on record from the ETF. So it was a bad week. Despite that, you did have some like Fidelity, FBC, ARC, and Bitwise continue to post consistent inflows. So there were some minor buys throughout the week. So it wasn't just one and done. Everyone was selling all doom and gloom. And what's interesting, is that in terms of the scale of the outflows, even though it was a bad week, we have already started to recover. Now, you look at this, what bucked the trend is, even though the Ethereum, which I haven't got a chart for, but Ethereum logged a 1.2 billion in redemptions in 6 days. So it wasn't just Bitcoin that got hit hard, it was all of the crypto market, with the exception of Solana. So Solana had the launch last week of, or just over a week ago, of its first ETF, and it's had around 294 million of inflows. So if someone tells you that the whole crypto market was down last week, no, institutions were buying into Solana. And it wasn't just that. Our old friends at JP Morgan, in their Q3 filings, announced that they basically increased their holdings of IBIT by 64%. So wow. $312 million.
That's incredible.
Yeah. Now, David, do you just want to give our viewers a bit of history of JP Morgan in 30 seconds?
Yeah, Jamie Dimon at JP Morgan has been infamous for being really an enemy of Bitcoin. He, at one point, he actually told his traders, he says, I will fire any traders that recommend Bitcoin, investing in Bitcoin, right? And that's quite strong from the leader, CEO of one of the leading investment banks globally. So it really took a long time, and even to this day, he doesn't outwardly support Bitcoin, right? He it's just in the background. He's had to listen to what his clients are asking for, right? And it's clear. So he's actually he's been forced to offer Bitcoin holdings, ETFs, to his clients.
And he said, I think you're completely right. I mean, the one that got me from what you just described was when he said, I don't encourage you to smoke. I'm paraphrasing, but I don't encourage you to smoke, but I'll defend your right to do it. So basically saying that crypto and Bitcoin was as harmful to you as smoking, which as Michael Saylor says, everyone is against Bitcoin until they're for it. Either you do it and you start to see the benefits from it, or you get dragged into it kicking and screaming and then see the benefits from it.
That's right. That's right.
So On some more optimistic news of people that are actually proactively looking for engaging with Bitcoin, another nation state has actually said that they are planning to build a crypto reserve fund. So not specifically Bitcoin, they've said crypto. Remains to be seen what they do, but basically Kazakhstan, the home of Borat, has basically said that they are going to invest between $500 million and $1 billion into their crypto reserves fund in 2026. And they're going to finance this through mining revenues, seized digital and primarily seized digital assets. So the key thing to know here is that instead of holding coins directly, as far as I understand, they're going to invest with ETFs and blockchain related equities, which to me would be something like MicroStrategy and IBIT. And being nation state, I would imagine they would probably go for something like IBIT. Why this is important is the more countries that that start to take this step, the more it starts to become normalized and the more that we will start to see accumulation happen.
And some people could argue, you know what, this is a small country. It's so, I mean, a lot of countries like El Salvador, Myanmar, some African countries, they say with smaller GDPs that they're going into crypto, and they're having a reserve fund in crypto. You know, in a way, what's significant about Kazakhstan is, I mean, $1 billion worth of crypto. You know, I mean, that is no small amount for them to be in proportion to their GDP. What is that? That's quite significant.
I imagine it would be. I like. There's no, and that's the thing. Think about how far, or for all the mainstream media that tells you that crypto is a scam, crypto is too risky. You've got the Kazakhstani government. Bitcoin and crypto has infiltrated that government so heavily that they are willing to invest a significant number, like $1 billion, into it.
Wow.
So think about that. That's how quickly these things are moving and penetrating. And I do think that the countries that move fast, like El Salvador, like Bhutan, now like Kazakhstan, will be the ones to benefit from it. So, talking about treasuries, Robinhood had their Q3 earnings call, and within that, they said that they are considering putting Bitcoin on the balance sheet. So, basically, the CEO, Vlad Tenev, basically stressed their focus on innovation and growth, and basically said that they're actively looking at a Bitcoin treasury plan. However, it's not all roses and golden roads. The executives tended to question whether it was the best use of capital, but the fact that they're exploring this is a very interesting thing, because Robinhood is growing quickly. Now, just to put that in perspective, I started to play my own little games, and I looked up Robinhood's cash in hand, and with that's basically how much cash they have available. And I started to do some estimates based on the size of their allocation that they may want, I've assumed between 1% and 10%, and I've taken the dollar amount, and I've then used that to estimate based on prices of 100 to 125k Bitcoin price, how much Bitcoin they could look to acquire if they obviously moved quickly. Now, it's between 1,000 and 13,500 Bitcoin, depending on how they buy, when they buy, which, to put it in perspective, in terms of public companies, would put them as around anywhere between the top 10th and top 20th holder. So it would instantly make them very big in the Bitcoin treasury game. So
that's
not
incredible. Considering that Robinhood just gained entry into the S&P 500, right? This was about a month ago, absolutely. I think. That's quite significant. So all these investment funds, all these mutual funds, all these institutional investors are now have holdings in Robinhood, and for them to be eyeing a Bitcoin treasury or putting Bitcoin on their balance sheet is huge.
Absolutely. And bear in mind that when the S&P rating agency rated MicroStrategy, whose almost its whole treasury is in Bitcoin, and said basically it's B-, it's junk, and therefore the risk that capital carries is too high for us. The fact that Robinhood are still talking about it, and the fact that other treasury firms are still talking about it, is phenomenal. I think that it really bodes well for the future.
Yeah.
So that's not the only news with old Tether, though, because Tether practices what they preach. Sorry, that's not the only news, because moving on to Tether. So Tether is the world's largest stablecoin, and they think of them like a bit more advanced of a Robinhood in terms of where they are along the Bitcoin mindset game, because basically Tether have actively added 961 Bitcoin to their treasury reserve. So Bitcoin now makes up 4.8% of Tether's total reserve.
Wow.
Now, what's interesting here is that they're not just allocating into Bitcoin, they're also allocating into gold. So obviously we spoke at the start about gold and Bitcoin sort of being different sides of the same coin. Well, Tether is also boosting their gold exposure. So they're now holding 13 billion in gold. And most of that is acquired through acquiring mining companies such as Elemental Atlas or Metalla. But this one caught my eye. So just because it's quite interesting. They've basically acquired a 10% stake of the Gold Royalty Corp, which goes by GROY. And the funny thing about this is this instantly made the executives at GROY concerned that Tether was trying to take over their company. So GROY responded with I like to think about it like a poison pill, where they basically agreed to cap Tether's ownership at 15%. So they bought 10, and then they've said, hey, if you try and increase your ownership more than 15%, we're going to instantly trigger a 50% discount share issuance, and which will dilute your shares.
Wow. Interesting. Okay.
Yeah. So really, you can see Tether is making these aggressive moves into both gold and Bitcoin. And so much so that this poor little gold company, not so small, but Gold Royalty Corp, GROY, was so terrified they've actually put in a 3-year plan to block what they perceive as a hostile takeover bid.
Interesting. Wow. And do you think, I mean, anywhere between close to a 5% stake or 5% allocation to Bitcoin compared to quite a significant portion in gold, do you think that's going to change? Do you think they're going to cycle out gold or convert their gold to Bitcoin, or even their bonds to USDT, their treasury bonds to Bitcoin, to increase that allocation?
I personally, and I'll ask you the same question, but I personally don't think so. And I'll tell you why. As I said, both gold and Bitcoin hold different allocations. And what I do think is that because Bitcoin, although the Bitcoin allocation in terms of its reserve power is smaller, so it will only take, at the moment, it's only 5% of their reserves. Basically, the upside for Bitcoin is far higher. So Bitcoin should grow because of its qualities far quicker than gold, because it's 1/13 the size of gold's market cap.
Yeah.
So
Yeah.
is it going to convert its gold holdings into Bitcoin? I don't think so, because being a stablecoin company and the biggest stablecoin company in the world, and basically having the full faith of the US government in that stablecoin company, they would want to back their treasury up with something that is recognized globally by central banks, I think, and by institutions, which would be gold. Bitcoin isn't currently at that stage. And I also think that Tether know if Bitcoin's upside is that much higher than gold, it's not, you don't need that much. Yeah. So will the percentage of Bitcoin as a percentage of their reserve grow compared to gold? Yes. I think it will exceed gold over a long period of time, just because the upside in Bitcoin is so much more.
Yeah. And that really is aligned with our strategy, our channel strategy, right? It's a small allocation that it gives potential for asymmetric returns, right? You don't need, I mean, a 5% allocation is massive. We're promoting at least a 1%, right?
Yeah.
To dip your toe in the waters and to really gain that exposure to an asymmetric asset, right? Or asymmetric opportunity. 5% just multiplies that. Yeah.
Absolutely. And I would think about it this way, and obviously we'll discuss this in another video, but Tether is the second largest private company that holds Bitcoin. So they now hold over 87,000 Bitcoin. Now, think about that. As I said, your Tether, you've got the world's largest stablecoin, USDT. You've got basically the endorsement of the US government to issue stablecoins backed by US treasuries, and yet still you're accumulating Bitcoin. That just shows that the faith that Tether has in understanding Bitcoin's true value.
Yeah.
I think.
Yeah, I'd agree.
So let's just talk about Tether a bit more. So Tether eyes 15 billion in profits in 2025. So their profits in 2024 were 13 billion, which is insane. And just to put it in perspective, their profit margins are like nothing I've ever seen. Their profit margins are 99%.
That's incredible.
So for every dollar they invest, they get $99 profit. Absolutely insane. So what's interesting though is back in 2023, Tether announced that they would allocate 15% of their net profits each quarter towards purchasing Bitcoin. Now, their most recent purchase that we just saw on the previous slide made me think, well, maybe this is something that Tether is planning to keep up. So I did the maths. And I said, right, in between these price points, the all-time high price of 126,000, and assuming if we drop down to 70,000, or because we could drop down to 70,000, I started to have a think about how much could, if they allocated 15% of those profits into Bitcoin, could they accumulate each year? And it's somewhere between 17,000 and 32,000 Bitcoin per year.
Wow.
At those prices. To put that in perspective, that equates to between 39 and 71 days of mined supply, so 450 Bitcoin a mined a day, being bought up just by one company that is becoming more profitable every year and therefore continues to buy more dollar value worth of Bitcoin.
That is insane. Well, we can probably talk about it in another video, but Tether as a company is becoming one of the most valuable companies in the world very quickly, right? And I still don't fully understand why it's able to basically print money so quickly. Because, like, just to break down the business model, so you go on an exchange, you then trade your fiat currency, whether it's US dollars, pounds, whatever, and you get a stable coin like USDT, right? And they in the background, not to oversimplify this, but this is where I see it working, then they have to buy US, so they give you, digital USDT, right? But in the background, they then acquire the equivalent of US bonds, treasury bonds, and whether it's gold and Bitcoin within their kind of balance sheet, right? They need to back up that, but they take a percentage, a small percentage of every transaction that happens. So it's the difference between the parity between what a US dollar is valued and the value of USDT, right? So they take a percentage of that spread between that value. Is that am I understanding correctly, Dom?
I think you're probably more of an expert on it than myself. All I know is that this Tether have got to be doing something right, because their valuation, they're talking about IPO, and the CEO Paolo has kind of hinted that he perceives a $500 billion IPO valuation as very cheap.
Wow. Wow.
It gives you an idea of just how profitable that will be. And the point, I think the key point that David and I was trying to get across with this, David, is this is a company that is not just showing through what they're saying, but showing through what they're doing, that they are committed to supporting the Bitcoin network and purchasing Bitcoin. So if a company that is continuously growing, continuously becoming more profitable, continues to buy Bitcoin, It's one of those companies like MicroStrategy that is helping to set the floor price on Bitcoin at a higher and higher price as time goes on.
Yeah, essentially what you're saying is Tether is becoming a Bitcoin treasury company, right?
It is a Bitcoin treasury company.
Right?
It is.
It is. Yeah.
We haven't seen them sell yet. They're just continuing to accumulate, and soon
Exactly.
they'll have, if they keep going at this rate, a couple of years they'll have over 100,000 Bitcoin potentially. Massive.
Incredible. Yeah.
So it's probably for reasons like that that you've got people like Cathie Wood and Arthur Hayes forecasting Bitcoin surpassing $1 million. Now, the reason that I brought this in today is because even though these two have been making these kind of predictions, is Wood actually lowered her base case. Yeah, so she's got a bear case, a base case, and a bull case, and she lowered her base case of 2030 to 650,000. So basically, her 1.5 million prediction of Bitcoin by 2030, she actually dropped to 1.2 million. So Arthur Hayes, on the other hand, who's basically the founder of BitMEX, one of the earliest Bitcoin trading platforms, he has been consistent in his approach. So whereas Wood believes that it's even though she's basically lowered her estimation because she believes that institutional adoption is happening slower than she believes. So she still thinks it's going to get to 1 million, but she thinks the stablecoin expansion and declining volatility have basically meant that it's going to happen slower than she expected. Hayes, on the other hand, is is becoming more optimistic, or should I say pessimistic in many ways, that the state of the global financial system is going to cause Bitcoin to go to $1 million far faster than anyone expects. So to put that in perspective, if we look at these projections, and I put in a few others here. So this is Cathie Wood's new base case, where she expects that it will get to 650,000 by 2030. So if you look in the third column from the right, in the highlighted column, the base case Wood, you can see that 2030 would mean to reach 650K at a CAGR of 39% based on $100,000 price today, that when I calculated this, which would mean that it would reach it in 7 years in 2032 to $1 million. Hayes, on the other hand, believes that we will get to 1 million by 2028. Yeah, which would be a 95% CAGR. And what I've done is, I know that I put in some of these others. You get Moon Boys that are basically saying, hey, we're going to 1 million this cycle next year, 2026. Well, that would be a CAGR of 884%. 2027, 133%. But others who are saying, well, actually, due to many macro factors, it's likely that this is going to take longer than many Bitcoin holders think. And it could take till 2040, so that's 15 years from now. That would still be a CAGR of 17%, which is pretty damn good, to be honest. That would exceed the S&P 500, NASDAQ, and most importantly, the debasement that we're seeing in the world.
Wow, because you know what, I really like this table because you know, in the past, at least over the past 5 years, Cathie Wood has received a lot of criticism for being way too bullish, and a lot of investors have lost faith in her ability to be able to predict the future returns of, you know, ARK Invest, her big kind of flagship investments portfolio. And to see her, basically she's cut in half her projections over, you know, and still, but it's, you know, still a very much aligned to reaching $1 million quite quickly.
Well, I mean, these are, even by 2040, over 15 years, it sounds a long way away, but 17% return in every year for 15 years, I would definitely take that. And for those people that say that that's not attainable, well, as of today, these are the approximate prices of Bitcoin every year for the past 9 years. And this is the compound annual growth rate from when I took, assuming the CAGR on 105,000 when I took this. So you can see we've fluctuated from a low. So the 4-year CAGR is 13%, which is one of the lowest it's been. but to a high, the 3-year CAGR has been 82%. So, yeah, it's these. If you look at the sort of the average of these, Wood's estimate is well within the range. 39% is well within these ranges, so we could definitely achieve it.
Yeah.
And talking about achieving unbelievable returns, Nancy Pelosi has, quote, unfortunately, announced her retirement, but that's not without her an absolute masterclass in political timing and investing. And that's because she's basically turned, between 1987 and 2025, she's turned a 785K salary into $133 million.
That's great.
And that's a return of 16,930%. So I did the maths. I just wanted to give you a few comparisons. So Nancy's return over the same time frame, that puts her just behind Warren Buffett and Berkshire Hathaway, which has had a 26,000% return. Puts her far above Ray Dalio, who we spoke about earlier. And in fact, the only one that comfortably beats her is Bitcoin between its inception and today. So kudos to you, Nancy. You've one of the best stock traders in political history.
It's funny because there are lots of memes out there about, and there are actually funds that track Nancy Pelosi's investments, and they're up. It's often compared with Cramer's. It's like opposite Cramer's fund.
The inverse Cramer, Jim Cramer track.
That's it. The inverse Cramer's fund and Pelosi's fund. And Pelosi's fund is up, as you've indicated, enormous amounts. And if you did the inverse Cramer, you'd also be up a lot. Not as much as Nancy Pelosi, but you'd be up a lot. But yeah, it's yeah.
I was about to say, I think what's important here is, for those, David and I might have assumed that people don't or are aware of Nancy Pelosi's reputation. She's a Democratic politician that has obviously served for many, many years now. But what's interesting is that not just her amazing investing returns over this time, but the fact that the timing of a lot of her trades tended to align with congressional sessions and policy moves. So
go figure.
Yeah, go figure, right? Yeah. So what David mentioned was obviously those websites that track, that believe that track these politicians' trades and believe that they may be trading on insider information. Well, Quiver Quantitative, which is obviously what's referenced in these screenshots you've got on screen, is basically does exactly that. They track her trades as a alpha signal for retail.
Yep. It's a legalized insider trading there, but a lot of people are benefiting.
A lot of people are against it, and that's why we've got 64% of people of 1,000 registered voters believe it should be illegal for politicians to own stocks and bonds while they're in office. Something which I completely agree with.
Yes, I'd agree with as well. Yeah.
And just to put it in perspective, we're not picking on poor Nancy. It's on both sides. There's been multiple instances of being both Republicans, Democrats, left and right. It's just that Nancy was the best. So if you're gonna cheat, be the best cheater, I suppose. Quick note on gold and silver. Well, specifically silver. So silver has basically so silver and copper and about 8 other materials have been added to a critical list of metals by the US government. And the reason that this is interesting is because the US government we're starting to get more and more the US government understanding the importance of these metals and understanding that they can't just basically rely on countries such as China, which they're becoming increasingly at odds with, to import those metals. So the reason that this may be bullish for silver, I think what the Trump administration knows, and what David and I have known for a while, is that the projected demand for silver is going to probably outpace the supply. So currently silver comes from 2 key places. comes from mine production. So mostly as a byproduct from base metal mining. It's not actually, a lot of silver mining isn't actually mining for silver. It's just produced as a byproduct. And recycling. Now, even though those two industries are going to increase their production before the mine supply, they believe, will peak in sort of 2 years' time, we're going to see a dramatic increase in the demand for silver, and that's predominantly coming from industrials. So specifically tech, AI, and green industrials. So we've got solar, electronical and electronics, automotive, brazing and soldering. These are all increasing by, I mean, look at it, 18% to 122% over the next 5 years, less than 5 years. Now, also, you've got another potential driver. You've got physical investment. Now, even though this is a lot more volatile, what we're talking about are people, investors like you and me, buying physical silver as they want to place it in their portfolio. And the estimates of how much this could increase are anywhere between 5 to 40% over the next 5 years, as more and more people opt to actually hold the physical stuff as opposed to holding numbers on a screen or an ETF or something that represents those holdings. So the gap would be, by these estimates, 323 million ounces in over demand per year by 2030.
Wow, it's quite significant as it relates to silver, because currently silver is not of the kind of equivalent value, fortunately, of gold, and therefore it's not being recycled. So any kind of gold is recycled, right? But all the silver that's being used in this commercial or industrial usage, it's being thrown in the landmines, right? So the finite supply is becoming even more finite, when it's mined. So it's actually, what I've read is silver on the periodic table of elements. Silver is the only element that is becoming extinct because of our inability to or our lack of recycling the element.
Absolutely, and I think that's really that's really underestimated. Is gold? You're talking about sort of underpriced compared to gold. So historically, the gold-silver ratio fluctuated between 12 to 15 to 1, meaning for every ounce of gold you had, you could purchase between 12 to 15 ounces of silver. Well, recently, the gold-silver ratio is fluctuating anywhere between 70 to 90 to 1.
Wow.
So either gold is overvalued. There's two ways to look at it. Either gold is overvalued or silver is undervalued.
Wow.
So let's move off of metals and quickly talk about real estate, just because there's some really interesting things that have happened this week. Specifically, Trump tweeted on Truth Social hinting at the ideas that he wants to start offering 50-year mortgages. Now, currently in the US, is my understanding, correct me if any of our friends from the US are watching this, it's my understanding that anything above a 30-year mortgage is not allowed within the US. Now, Trump has said that he's going to start enabling 50-year mortgages. Now, what's interesting about this is obviously those people that have been unable to get on the property ladder have started to cheer for this, even those that don't like Trump. They thought, finally, I'll be able to actually purchase a house because my monthly loan repayments will decrease and I can actually get on the property ladder. Well, let's just run the maths on that. So the average house in the US, from the data I've been able to find, is around $534,000 US as of August 2025. Now, I'm just going to show you, on an interest rate of 6.5%, the monthly payment on a 30-year mortgage is $3,300 compared to $2,900 on a 50-year mortgage. But because the mortgage goes on for longer, your total repayments now increase from $1,200,000 to $1,700,000. Now, to put that in perspective, you bought your house for $534,000. You're now paying 127% on top, just on interest for the 30-year, but 235% on top for the 50-year. So you've almost doubled the amount of interest that you're, as a percentage of the initial home loan that you're paying, and you're doing it for basically a saving per month of around 11%. So your monthly loan repayments are only decreasing by 10, 12%, but overall you're going to pay basically the equivalent to another house on top just to have that 50-year mortgage.
That is shocking. That is shocking. So they're tying you in. Basically, it's handcuffs for a longer period of time that makes you kind of pay double of what you would have expected to pay off within 30 years.
That's it. That's it. And to me, and feel free to jump in, when I see 50-year mortgages, to me, it's just about sustaining the debt. It's not about helping borrowers. You'll see all these headlines saying, we want to help first home buyers get on the ladder. Well, it doesn't do that, because all it does is inflate demand. If you enable more people to be able to buy houses, yeah, you're going to inflate the demand. Yeah. It also means they're going to end up paying more. You're basically just pushing more money into the hands of the banks, who have the ability to buy that house outright and then lend you the money. And that can go on for decades. Yeah,
that's really scary. I like how you outline the cost difference over the 50-year term of the mortgage. That is scary. But it's being presented as this is going to help the U.S. public, right?
Absolutely.
People that can't get on the property ladder. This is going to spread out your payments over 50 years rather than 30 years. But it's like, yeah, they don't realize people haven't done these calculations, right, to understand the impact.
And that's what's sad. A lot of people get lured in by this. Like, it's bad when even Bill Pulte, who's the federal housing director in the US, basically called this a complete game changer.
Right.
Well, it's going to be a complete game changer for your wealth. I'll tell you that. It's not going to do you any. It's not going to make you any do you any good whatsoever. And it gets worse, David, because did you know that the typical first-time home buyer is now 40 years old, meaning that when you finally pay off that 50-year mortgage, you'll be 90 years old.
Oh, wow!
Just to put that in perspective, that's higher than the average life expectancy of the US.
So the government, sorry?
So I was just going to say, so basically, you'll die before paying off your house, likely. And just put this in perspective, this first-time home buyer is now 40 years old. This, although it's been going up quickly, the change, a lot of the change from what I can see, has happened since COVID. Sorry, since a lot of the change that I've seen has happened since the beer pandemic. So it's increased 7 years since 2020. So the average home buyer age in 2020, from what I can find, was 33 years old. It's now 40.
There's still a belief and a kind of a policy for the U.S. government to keep people spending money and actually to keep them in debt for a longer period of time. And this is what's really dangerous, right? It's, say you compare buying a house and getting a big fat mortgage with renting. It's still, the American dream is still predicated on buying a home, right? And that's, if you were to, I think that there's a really quite a popular personal finance guru. His name is Ramit Sethi. He's saying, you know what? You don't have to buy. You don't have to tie yourself into this debt for, 30 years. There is an option. What you do is you rent, and then you take the difference and you invest it in the markets, ideally in Bitcoin, but invest in the markets.
Rent vesting, I think, is what he's talking about. What I think what's interesting is the idea that your house is your castle. I think is something that a number of people are going to have to start to change their mindset, because at current prices and at current valuations, it's likely that many people will not own a house. And if they do, it will probably be to their own detriment. They'll potentially sign themselves up to a lifetime at this rate of wage slavery, where they have to keep working just to pay off their mortgage. And if they stop, their house gets taken away from them.
Yeah.
And
I like
look,
to call it golden handcuffs, right?
that's
You're
it.
tied in. Yep.
That's it. Golden handcuffs completely. And look, a lot of the dream is for a lot of the dream has been to buy real estate, like specifically new houses. But for the first time, we're basically seeing new construction, what we're calling the new construction premium, collapse. So this is basically the idea that if you're buying something new, it should trade at a premium to something old. Makes sense, right? Why would I want to buy something old if I can buy a nice new version? Now, this is actually what we're seeing is 2025 is the first time ever where we've seen that premiums basically collapse to zero, meaning that builders are cutting prices just to maintain liquidity, even though, and here's the important part, their input costs are up around 30% since 2020 due to inflation.
Wow.
Yeah,
Wow. That's crazy.
yeah.
So how are they
So
staying in business? How are they making money, these home builders?
good question. Cutting corners, I would imagine. Cutting corners, um, building more tactically. Uh, I would. I'm not sure. I'm not an expert on the industry. I would say
Mm,
that there's definitely, and for every company that is able to keep its head above water, if this continues, we're going to start to see more and more companies go under. I think you're looking at middle class erosion. I think you're looking at also a psychological reversal. Seeing that in this chart is what that said to me, in terms of people are understanding. Well, hang on a minute. Um, the whole idea of buying something new at a premium means that I could obviously sell it on to someone new at a premium as well.
yeah.
So, for
Yeah.
instance, if I buy something that's 50 years old, I'm less for $1 million, and I buy something that's built this year for $1 million. If I wait 10 years, the likelihood is that I'll be able to sell on the new property because it would have needed less work to it at a higher rate
Mm,
compared to the old property, which probably needs a load of damages. So what this signals is that when builders lose pricing power pre-recession, it flags the early stage of credit stress within the mortgage market. So this is something that we haven't been seen before, and if we have, I haven't been able to find a record of it. But yeah, it's really not a good sign for the housing market long term.
right.
So quickly come on to our macro events. I'll go through these really quickly. Our good friend Donald Trump has basically proposed that he use 2000 that he use the tariffs to fund $2,000 stimulus checks. Now, from this, he'll exclude high earners, and it's framed as a dividend for the people. Now, he claims that the tariff revenues have brought in trillions, and this will enable the US to become competitive, and that obviously these US citizens, these low-income earners, deserve to take a part of that. What's interesting is that I personally like to think of this as a bit of theatre, because under Trump, the budget deficit has remained at 2 trillion, and the US debt has exploded through 38 trillion. So rather than paying off any kind of debt or helping make that better, his solution is to go and give money out to the public, which tends to be inflationary because the public tends to go and spend that money as soon as they've got it.
Right. Interesting. Wow.
Yeah. So not a good sign, I personally believe. But, I did a bit of maths, as I always do. And I started to think, okay, what percentage of that money, if they do get checks between $1,000 and $2,000, what percentage of that money could we expect to flow into Bitcoin, and what would the price be? Now, I was hoping to make myself very happy with it, because I was thinking, well, when the beer virus happened, there were obviously multiple rounds of stimulus given, so $1,200, $600, $1,400, and I was thinking at the same time was when we saw a Bitcoin boom in price, where it went from $3,000 to all the way up to $60,000. So huge moves. And so I thought, well, maybe the same thing's going to repeat. No, unfortunately, I don't think so, because a lot of that was actually down to liquidity that was entering the market. The estimates that I've been able to find showed that only between sort of around 7% max of those stimulus checks actually went into Bitcoin. Yeah, which is still massive. But the impact on the price in Bitcoin's price was anywhere between 0.07 and 0.6% in the short term, and up to 3.8%. So modeling that out, assuming the price of Bitcoin is 105K, you're looking from anywhere from sort of $100 increase all the way through to a $3,000 increase.
Yeah, it's not as significant as I would have thought. Yeah,
it's not. I was trying to find some silver lining, but I couldn't. So sorry about that, David.
That's good you played the numbers out.
That's
because
it.
that was my belief too during COVID, that people plowed their money and they became like Bitcoin millionaires with just with stimulus checks. That was kind of the perception, right?
Yeah, absolutely. But I mean, we're looking at huge numbers. So obviously the person who got those 3 stimulus checks and put them all into Bitcoin did very well out of it. But that's not the person, that's not everyone in the world did that. There were other investors, there were other people buying into that trade. And obviously the market cap was far smaller. So it required far less money going into the asset in order to move it.
That's right. And since January 2014, when the Bitcoin spot ETF was launched, it's shifted the liquidity in the market and the buying behavior of Bitcoin into Bitcoin. It's now institutional investors and the big, Wall Street that's now into Bitcoin, and retail investors they're not moving the market and the dial as significantly as before.
That's it. But I did want to finish up on a quick note. So just a reminder that $1,200. So if you'd have got one of those checks and put it all into Bitcoin and held it, you'd be looking at around a $21,000 value at the moment.
Oh, wow, that is crazy.
So maybe worth, for anyone who's watching who does receive one of those stimulus checks, maybe worth putting in your 1%, not financial advice.
Nice. I like that.
The other big one that we've obviously been talking about for the past couple of days is the US government shutdowns. So the US government shutdown has now gone on for a staggering 40 days. That's 14 failed funding votes between Democrats and Republicans failing to agree on what the outcome is. It's now blown the old longest shutdown of 35 days, also under Trump, out of the water. 750,000 workers furloughed, 1.3 million US troops unlikely to get or at risk at not getting paid, 1,500 flights cancelled, $8 billion in SNAP benefits frozen, and Trump is blaming Democrats, and Democrats are blaming Trump, and they're unable to come to an agreement. Now, what I wanted to show here, like I think we can all agree, is a very bad thing. However, just wanted to show from this chart what happened the last time that we went through the government shutdown in 2019. Now, obviously, there's a load of factors. I'm just going off what the chart is, what this one chart is telling us. So in 2018, 2019, the US shut down for 35 days, as I said. It actually shaved 20% off the Bitcoin price. But then government reopened, and Bitcoin's price rallied 300%.
Wow.
Yeah. Now, if the same were to repeat, you'd obviously be looking at, you could be looking at anywhere between 130 and 150,000 is where I put my estimate. Just because we're a larger asset. If you use the same kind of increases, you're looking at around a $300,000 Bitcoin. I just think that because we're a larger asset, probably anywhere between the 130 mark and 150 mark is more likely.
And that's a very short period of time. So between December 22nd, 2018 to January 25th, 2019, that's a very steep increase in such a short period of time. Wow.
Absolutely. And what's interesting is, as I said, in 2018, 2019, it brought Bitcoin down 20%. What are we currently down in Bitcoin since the government's been shut down over October? 20% from all-time highs. Very, very similar. And that's why I've said history doesn't repeat, but it often rhymes.
Yeah, I like that.
Now,
that's very bullish.
I've started to get rumors through the grapevine that this chart is already outdated, and I grabbed this earlier today. but obviously Polymarket was giving the odds that the government shutdown would continue until after November 15th. Yeah, at the very least until November 12th. So that wasn't looking good. However, just before I came on this call, started to hear rumblings, and this could be something to do with the price increase in Bitcoin and other assets that we're starting to see, that Democrats and Republicans have started to come to an agreement. So fingers crossed, because that could be a nice catalyst for us.
Very nice. And also Thanksgiving in the United States is quickly approaching. So it's either 26th or the 27th of November. So, I mean, everyone needs to, I think they're expecting they're going to come to agreement at least before that date.
Oh, fingers crossed. What day is for Thanksgiving again?
It's the Thursday, the third Thursday of every November every year.
Gotcha.
So it's either the 26th or the 27th.
Gotcha.
Yeah, I think it's 27th of November.
Well, my bags could definitely do with a Thanksgiving gift, which would be the government reopening.
Nice.
As I've always said, the markets hate uncertainty. And I think as soon as this whole mess is tidied up, we can get back to business as usual.
Exactly.
Anyway, guys, that is it from me for today. David, do you have any last thoughts or words for our watchers, or should we leave them hanging till tomorrow?
No, just to sum things up, I think it's been a great kind of review of seeing the end of the kind of the 20% dip in the markets, and that's both the stock market as well as Bitcoin. And I think, as you said, more certainty in the market, and in the kind of wind down of this year is quite bullish. All the indicators are showing that the asset prices are going to be continue to appreciate. And yeah, I'm just looking forward to the next few months, and slowly and consistently just dollar cost average into Bitcoin.
Right.
That's going to be my play.
I think I'll be right there with you. Just dollar cost averaging, buying a little every day, helps take the emotion out of it. And as David said in our last video, helps ensure that you don't go crazy by looking at the charts. Sometimes a set and forget approach is best. But anyway, guys, that is it for today. And don't forget, when it comes to Bitcoin and when it comes to your investing, most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they act with conviction.
Be a 1%er.
Have a great day, guys. See you later.
Bye.